Before we get started, the In-N-Out team thought we might do a little bit of trivia on In-N-Out, so.
All right, we've got a few questions, and we're going to give away some swag. And so raise your hand if you know the answer. Our first question is, does anyone know what milestone anniversary In-N-Out recently celebrated? Oh.
Yeah.
Yeah.
Yep, that's
right. 75th anniversary. So we opened October 22nd, 1948, and recently celebrated 75 years. So, okay, next question. Does anyone know the city and state where our first location is located? That's right. That's right.
Wow.
Nice job.
Right.
Nice job. Baldwin Park,
Got some real fans here.
That's awesome.
We have even a replica #1 at Baldwin Park, California. So if you're ever in Baldwin Park, you can drive by and see our replica of our original store #1. And then can anybody name 2 states outside of the state of California where In-N-Out has restaurants?
Ooh.
Yeah, good job.
Texas and Nevada.
There you
Nice
go.
job.
Very nice.
Awesome, good job. We weren't sure if people were going to be able to know the answers to the questions. I only knew one. All right, so I'm Cyril Mathai. I'm with KPMG. I led the account reconciliation work stream. If you don't know, it's been renamed for the In-N-Out project. So that will be my role as we kind of start talking through our conversation today.
I'm Jennifer Gonzalez. I'm the controller at In-N-Out Burger. I've worked at In-N-Out Burger for 19 years. And for the implementation project, I oversaw the finance and the payroll pieces of the implementation.
All right, I'm Erin Flood. I'm the assistant controller. I will be celebrating 12 years in November with In-N-Out Burger. I had cash management projects, account reconciliation, FCCS, accounting hub.
Yep.
Those were my scope areas for this project.
Hi everyone, my name is Ms. Sapone. I'm with KPMG, and I was the finance solution architect on this project. Excited to be here today.
Hi everyone, my name is Peter Kim. I'm manager director with KPMG. On this particular project, I served as the overall finance leader, working with Jennifer and her team, like Erin, and helping them deliver their value. So.
All right, well, thank you for coming again. The way we decided to kind of go about the conversation was first maybe tell you a little bit about what was all going on at In-N-Out, because it does play into some of the things that we decided and how we executed the project. So we'll start with some of the why did In-N-Out decide to go through this journey. Then we'll cover the full implementation scope, if you will. We'll read through the contract. I'm just joking. We'll talk about what are all the modules that we were going after, and then what's that journey look like, and then narrow a little bit more into the finance side. So from a record report perspective, what all were we doing specifically in finance, and then we'll get into the ARCs and the hub discussions, which hopefully that's what you guys came to hear. And then we'll end with some lessons learned that we kind of gathered throughout the project, and other things that for those of you that are thinking about this journey, or maybe you're already in this journey or have done your journey, that you might want to consider in your future view of how you look at account reconciliations. And if you stay, you can also have a chance to win some more swag. So from In-N-Out, not from KPMG, so it's the cool stuff. And then we'll do questions after that. So, and just one note, as we go through the discussion, so we are asking you guys to hold off on any of the questions until the very end. They've got a great story, and we want to make sure that they get a chance to tell that story to you guys. All right?
All right, so I'll share a little bit about our journey into Oracle. Oracle is In-N-Out's second ERP. Our first ERP was implemented in the late 80s, and it was an on-prem system that we continued to develop and customize over the years to meet our growing needs. But technology has changed quite a bit over the last 30 years, and we determined it would be beneficial for our organization to move into a more modern cloud-based ERP to provide scalability for our continued growth. And we found that Oracle was really the best fit for all of our functions within our organization, for finance, HCM payroll, and for supply chain. And as we began our implementation, we set out to implement as many best practices as we could. And for our finance team, that meant looking for ways to reduce paper and manual processes and reduce our reliance on Excel for reporting and reconciliations, and also improve our close cycle. So we just went live with 8 finance modules this past April, and we'll talk a little more about those modules on the next slide.
Awesome. Thank you, Jennifer. So before we dive really deeply into account reconciliation and our solution and our approach, it's really critical for us to understand and give everyone a broader perspective about the work that we were doing at In-N-Out to kind of understand the comings and goings, right? And so as we sat down with In-N-Out about 2 years ago now, and we started on this journey together, there were a couple of key goals that In-N-Out wanted to achieve. And so one was we wanted to establish a key good foundation. In-N-Out really truly understood the fact that cloud enabled the journey. It wasn't a point in time. It wasn't, hey, we're going to go live and then we're done with this. They really saw this as, hey, we need to make sure that we have a core foundation in place. And so there were some really critical business strategic opportunities and goals that In-N-Out wanted to achieve. One critical one was really simplifying the stack, right? So Jennifer mentioned their old system was a hodgepodge of very custom, very unique, very bespoke is probably the better way to put it, applications that were put together to serve their functions. Simplifying that stack was critical. Standardization of master data, as well as a new chart of accounts, is critical as well. So In-N-Out's business continues to grow, and their chart of accounts needs to grow with them. Enabling real-time insights was very critical to In-N-Out. Having a leading practice target operating model was also very, very critical. And so keeping those things in mind, the approach that we took was really a 2-phase approach for this initial kind of step in their journey as they lay down their foundation. And as Jennifer mentioned, we kind of covered 8 different modules within the finance space across 6 different process areas as phase 1. And so that went live back in April of this year, which we're all really excited about. And we're going through our 4th close now.
That's right.
Yep, so thank you. Everything's working. And we have HCM and payroll, which will go live in early 2025. And so that's kind of our 2-phase approach. And really the reason why we took this particular approach is there was 3 kind of critical things in our mindset, right? And so one was it was a least risky option for us, right? And so going a big bang, impacting the business in a major way was not something that we really wanted to approach. Secondarily, from a business continuity perspective, again, impacting the business was something that we just could not do, right? So from an In-N-Out perspective, impacting the associates and that change is something that we needed to manage in a critical way. And also this approach really allowed us to have speed to value as far as getting In-N-Out on Oracle Cloud in a quicker fashion and getting that kind of core user group and really achieving their value in a quicker way. So I'm going to hand it off to Miz. He's going to talk a little bit more about R2R. So I'll leave it to you.
Yeah, thanks, Peter. So yeah, my name is Miz. Let me kind of walk you through the ERP EPM landscape in and out. As you can see, we have both transaction matching and reconciliation compliance modules in place. I'll start with reconciliation compliance. We were able to leverage a lot of standard functionality as it relates to reconciliation compliance. As many of you probably know, there's out-of-the-box features that we were able to introduce, such as being able to enable GL connection. And that really allowed us to bring balances, bring activity over from the general ledger into ARCs. It also allowed us to drill back into the ledger and sub-ledger details. So great, outstanding standard functionality that's available. In addition, we were able to use the standard connector to bring forth AP balances, project balances into our account reconciliations that really allowed us to automate a lot of the balance comparison reconciliations. So really nice features. We also enabled enterprise journals to allow us, as we identified adjustments in our recs, we were able to send those over to general ledger. And then lastly, from an FCCS standpoint, we were able to use the task manager to really start getting our feet wet into being able to optimize that close. So we're just getting started on that. There's a lot further development there to be had. From a transaction matching standpoint, very different flavor. This is really custom integrations that we built to support what we're talking about today from a cash reconciliation standpoint. In particular, from ERP, we sourced two sources of data. Cash management data. We were already working on creating banking information off of BAI files. So that naturally was something that we were going to bring over to ARCS. And then from an accounting hub standpoint, we have a lot of different sources of data, and we are able to coalesce specific cash account matching information, in particular POS and bank feed information. So we're able to collect a lot of robust data that really proved to be very successful in the matching process. I'll just touch on a couple other things from a transaction matching standpoint, and that is that we built an integration that allowed us to send adjustments back to Accounting Hub. The out-of-the-box feature of Enterprise Journals works really with just reconciliation compliance, so we had to build a specific custom integration to make Accounting Hub whole again. The last piece is EDM. EDM plays a big role in terms of our master data, not just outside of COA as well. And what we were able to do is we were able to use EDM to capture a lot of store information that allowed us to feed both ARCS as well as Accounting Hub information. Let me send over to Cyril.
Yeah, so drilling down a little bit further. So this is kind of where we start getting into the transaction reconciliation setup. So on the left-hand side, you can see we've got third-party data like credit card processing fees, and then all of our retail data coming in via Accounting Hub. So again, versus using flat files to pull POS data, things like that, which is kind of traditional and historical, the benefit of leveraging Hub allowed us to minimize our source of data, and all of that activity actually comes to transaction reconciliations from the Accounting Hub. We did use Oracle, the integration cloud. I keep getting a space when I say it, but we used OIC to drive all the integrations that Ms. was talking about. There's like 10 to 12 different integrations that we built in to help the whole data flow. On the right-hand side, then you can see what you would expect, right? Bank data coming from the different banks, and then the credit card processing data, all of that converging into reconciliation compliance. As Ms. said, we also built a daily feed of those adjustments. So as we run our integrations in the matching process, immediately any of the automatic adjustments immediately go back to Hub to be processed. But then the reconcilers are doing their work during the day, and so we want to make sure that any of their adjustments is, I was going to say as you said before, but that was during rehearsal, that Aaron will speak to in a second, it allows us to process any of those manual adjustments back to the Hub on a nightly basis. So we're getting real-time corrected data as we go on a day-by-day basis. I'll let Aaron speak to some of that benefit that they found coming from Hub and why this was particularly crucial.
Yeah, so Accounting Hub really allowed us to bring that point of sale data in at a lower level, while allowing us to meet our operational reporting needs, but then we could send it to the GL in a summarized fashion, which doesn't clutter up the GL with a lot of extra transactions. The other benefit is we are sending back those adjustments every night from transaction matching, which allows us to get a more real-time picture of what's going on with our store cash. And that was something that we didn't really have in our legacy system. It was something that posted every period, so we were really going from not having that insight for close until we got into close to now being able to kind of work through those problems as we work through the period.
So we have two use cases that we implemented in transaction matching. So the first one being the depository bank reconciliations. You may have a question mark. We referred to cash management earlier. So all the operational or concentration accounts went into cash management. Just works really well there. And the bigger pain, if you will, that we were trying to solve for is on the depository bank side. So that's one of the stories that we'll talk through. And then we'll talk through the credit card reconciliations as a second use case.
All right. This is what everyone's here for. All right, so depository matching. So when we designed transaction matching, we had a really basic goal. Our stores are recording sales every day, and we want to make sure it settles at the bank for the dollar amount the store said. And if it doesn't, we have to understand why. So from a depository standpoint, our legacy system had transaction matching. So we weren't starting from scratch, but Oracle has given us a lot of enhancements that we can do that we've refined our transaction matching. So some of those things, just to kind of give you an idea, are suggested matches. We have 400 plus stores, and they all use the same bank deposit slips, and they print the store number on them. A lot of the time, store 48's deposit posts to the bank as store 88's, just the way they read the deposit slip. So Oracle suggests matches that don't meet the normal criteria, and it allows us to quickly look it up in the bank and see that that really is for that store. We're good, we can move on, what's our next issue? The ZBAs. So as Ms. mentioned, cash management is sending every day the amount that our main bank account received from our depository account. This allows us to take that dollar amount and match it to what is coming out of our depository account. In our legacy system, we really didn't look at the sweeps until the end of the period. So we were really doing that big reconciliation that would take us a lot of time to get through all that data. Now, we have the opportunity to look at that every day, and it's just part of our day-to-day routine.
One last point on this. This match type integrates back to reconciliation compliance, so they do that month-end process there. So this is live integration, if you will, not operational in nature.
Credit card matching. So this is probably our biggest change. So our legacy system had transaction matching, as I mentioned, and we were really looking at daily credit card totals for the store as compared to what cleared the bank. So we've taken that same reconciliation and put it in transaction matching, but we've added 2 additional reconciliations. The second one would be that we take our summary point of sale data and we go back to our swipe data. So that's just making sure our back office is in sync with the individual swipes. And the last one is swipe to swipe. So that's taking our point of sale swipes and comparing it to our processor file to understand each swipe. Having that third reconciliation has really allowed us to move through the first reconciliation at a faster pace. We've put some tolerance rules into place because we know we're going to get into the meat of why things are off in that third reconciliation. And we've gone ahead and tagged each transaction with different classifications so that we can report on why are we off. And for us as business case users, we store and forward, so that's sometimes what causes us to be different, as well as refunds issued at our corporate location. So those aren't going to flow through the point of sale. So those are just some of the reasons why we see differences day to day.
So just to kind of summarize on the match types, so we have 3 specific match types. We've got the first one being the hub, or which really represents the GL, and POS is the majority of that data, compared to the bank. The second match, and sorry, in that first one, I always forget to add this. In that first one, that one integrates back to reconciliation compliance, so the month-end reconciliation occurs with that. The second match type is operational, so that POS, we're comparing all of the details, swipes that are coming from the POS as well to make sure our accounting documents are correct. And then that third one, as Aaron said, is that now we take those POS swipes that are occurring and meticulously compare them to the credit card processor file. I think you guys have found some issues through all of that, but I think my own past came out of industry, and that approach really helped us with cash coverage, things like that just make a better, powerful reconciliation process.
Yeah, one of the challenges that we faced during our implementation was that we actually changed credit card processors during the middle of our implementation. But that is one of the benefits of the reconciliation, is that it can handle multiple credit card processors, and so you can do that reconciliation with multiple credit card processors.
Yeah. All right, so conversation here, and more importantly, is now understanding that flow of data between hub and account reconciliations. There's no integration today, so we had to build that integration. We learned a lot through that process, right? So we have a daily process of store activity coming into hub, and Aaron will talk about in a little bit just some of the things that we had to do to kind of understand the sequence of data, and it's very critical when you're thinking about when stores post their POS data and get it into corporate, et cetera. Well, when do I get that in ARCs, right? So there's a lot of that sequencing. The other piece was also then writing back to hub. So one of the challenges we had on transaction matching is there's not necessarily data control for us to be able to control, to make sure that the data that we're creating and adjustments are formed as well as they should. Obviously, transaction matching integrates back to GL really easy, but in our scenario, especially because of the insights that In-N-Out's trying to derive from the data that's in Hub, there's a number of fields that we add to our adjustment form to be able to go back to Hub so that way it can report on a complete basis. So, this is not your standard, if you will, journal entry type of situation for us. And so, because of the lack of integration, we had to create then external validation. What that helped us with is we found, there's manual error, right, when you're generating a journal entry or a manual adjustment. And these aren't your automated adjustments, right? So we have rules that come with adjustments. Those process just fine. But when the users, potentially fat fingering something or, miscoding something and maybe there's a problem with it, we didn't want all of the adjustments to fail. So we created that external validation. And then those individual adjustments that have problems go back to the accounting team. They know to fix those. They don't have to undo all of the matches. They can just stay focused on the ones that were errored out. And then they can process those back in on a timely basis as well. But that was a pretty big learning for us. The other thing to keep in mind, and we'll talk about this in our in some of the learnings that we had, is in Hub, if something's wrong with an entry, then you will reverse that transaction. You create a reversal transaction in the Hub. Well, guess what? We have to take that data into account reconciliations as well, because we want to make sure that the reconciler sees everything in the source system. We made some mistakes during our testing cycles that we learned from, where I've been doing this a very long time. And we just we'll just unload those reversals. We don't need them. But guess what? Originals and new data all need matches. So we found our way to flow through that, run auto or create reconciliation rules to deal with reversals first, and then do the matching process against your third-party source data. All of those kind of learnings played into how we kind of manage the flow of data between the Hub and account reconciliations.
Yeah, and I would just add that given that this was a custom integration between Hub and ARCS, one key critical component was for us to be able to easily identify the transactions that needed to be picked up, right? Because this was custom, we didn't have an audit table that could easily tell us, or flag that could tell us, hey, this is the data that you need. So that was a really important requirement, as well as knowing that the data that was picked up from Accounting Hub was processed successfully in ARCS. So our technical team came up with a creative solution that allowed them to specifically identify where the data was cut off, to be able to select the data, and then they also came up with an API that allowed them to identify exactly that those transactions had been properly processed and validated through ARC. So that was a really key requirement that needed to be met, and we were able to accomplish that.
Yeah, I mean, one of the business pieces of that is, especially for those of you that are familiar with retail, stores can post late. You might have transmission errors, and so our runs run around 7. I don't know. We've got a window of cycle from 3 a.m. to 7, 8 a.m. in the morning, and so if we're already past those, then we've got to make sure that we're able to catch the incremental changes, and so that really helped us make sure that we were reconciling the right information and not late information. All right, so we're going to move into kind of what are some of the things and insights that we've kind of learned as we went through this journey. So I think you're picking up number 1.
I'll take it. All right. Understanding the flow of your data. So if anybody knows me and there's a whiteboard in the room, I'm going to use it. So we really took the time to make sure that the raw file that we knew was going to come from the point of sale, how was that going to go into Accounting Hub? We had the debits, the credits, making sure everything was going to flow the way we expected it into Hub. And same with the adjustments that we decided to use within transaction matching. How is that going to affect the cash position? Is it a positive? Is it a negative? Where do we want it to hit? Over short? Is it a chargeback? Do we want it to hit a different GL account? But really taking the time to map all of that out so the whole team knew what the goal was really made the design a lot easier.
And you still have all your...
And I still have my T-charts in the back of a notebook. I'm an accountant.
She regularly brings them back up to me, so...
That and the load schedule.
Yes.
You have the pictures too.
Yes, that's right.
That's right, yeah.
So number 2 is really being proactive about understanding what new features are going to be introduced from an Oracle perspective, right? On the ERP side, we have quarterly releases. On the EPM side, we have monthly releases. We found that as part of our project lifecycle, we found 2 instances where we were actually able to introduce standard features that were released, and it really avoided custom code, essentially, right? So working with Oracle, knowing what the roadmap is really critical so that you don't have to go and spend additional effort and cost building something unique when in fact Oracle can probably introduce some of that through standard features. So really important there to be proactive about your releases.
It's also very helpful if the product manager for account reconciliations is a personal friend.
Yes.
He's sitting over here. If you guys want to talk to him later, he loves talking to customers. So, good guy, Tim Gomo, if you haven't met him yet. Number 3, so I mentioned the whole piece of the reversals occurring in the hub. So before we even knew we were going to be talking about this project and this journey here in Vegas, there was a Cyril's golden rule, which is what happens in the hub stays in ARCs. And so don't delete that data, don't unload that data, don't just leave it, let it flow through, and then figure out ways to reconcile that data as it comes across.
Number 4, a couple of the reporting benefits that we realized were being able to categorize transactions and adjustments right when they happen, instead of needing to do that 3 or 4 weeks and try to remember what caused those variances, which just results in better reporting and information. And then we were also able to take that work and spread it out. It used to all need to be done at during close week at the end of the period, and now it's able to be done throughout the period, and so it's more timely also.
All right, single view. So I think after our second test cycle, we kind of went back to the drawing board on the load of data. And what we did to kind of establish that testing plan was really lay out, okay, if we're going to start with 1/1 as our first business day for test cycle, what's going to happen on 1/1? Okay, point of sale data is going to load into the hub. Nothing's going to happen in ARCs yet. The next day, what's going to happen? Point of sale is going to load in ARCs. This bank file is going to load. This processor file is going to load. And it really laid out a day-to-day load cycle for each of our files. So this really helped us with setting up testing, and then also for cutover. It really made sure that we were following what would real-life production look like. When are those bank files dropping? When can we load them? And it really made the next 2 testing cycles much more successful.
Just one point on that, it just sparked my memory. So because In-N-Out was already utilizing a solution, cutover becomes extremely important. It's not that it's not important when you're not utilizing a solution, but you can kind of wing it a little bit differently. You have to be very exact. And so we had lots of meetings around being very precise around what cutover looked like. And to Aaron's point, this is like a spreadsheet that looked terrible because it's so much. And you could look at it and say, what the heck is this supposed to be? And it was really mapping out all of the data inputs and the timing of those data inputs. Otherwise, we would sit in situations where we had data that had no matches because we just didn't time it correctly. So, and there were some things that we had to kind of, delay expectations of data in order to make sure that the workload on the reconciler wasn't not only unrealistic, but unnecessary as well.
Yep. And then the last one is for testing. You really want to go end to end. As much as possible, start your matching. If you can do an entire close process, go through the month close and actually go all the way through to rec compliance and your actual bank statement tie out, it's a victory. We were fortunate enough to have a system where we were already doing transaction matching. So our last 2 test cycles, we did do 2 full periods that we'd already closed out in our old system. So we knew what we were tying back to make sure that everything was posting correctly. And then, again, another added benefit of a legacy system is we actually ran in parallel for our first close of Oracle. So we actually did transaction matching in our legacy system and in Oracle, just to ensure that everything had run the way we expected it. Cutover went smooth. It was a real benefit for us to have that to compare back to. It was successful, so it was a good day.
All right, so we thought maybe you would also like to hear what is In-N-Out thinking about next.
That's going to me.
Oh, sorry.
It's okay. We've punted. So now that we know the capabilities of Hub and transaction matching, what can we do next? And so what are our more detailed reconciliations? What's a big Excel lift? And so we've kind of identified 4 areas that we are going to explore. For transaction matching, we're going to look at gift cards and also our corporate credit card reconciliations and bringing that data in and doing that transaction matching in the system. From a hub perspective, we do have 2 other sources of revenue outside of our stores. So we have our merchandise sales and our catering sales, our cookout trucks, if anybody knows those driving around. So those use 2 different systems. So bringing that data into hub and allowing that to drive the accounting in the GL. Right now, those are very monster spreadsheets that require a lot of data manipulation. So those will be 2 huge close wins once we get those going.
So then, in terms of standardization, so Jennifer and Peter especially kind of outlined the tremendous journey that they've been going through over the last couple of years. That can inundate the accountant with a lot of change. And so, especially as someone that has gone through this before, leading accounting teams, you have to kind of pick your battles, pick your journeys, right? And so we decided from a reconciliation compliance perspective, Ms. and Aaron kind of talked about we've got some of the subledgers coming into ARCs, and so we're getting that benefit there. But for the rest of the balance sheet right now, the decision was we'll keep those in Excel, but we're going to use reconciliation compliance to give us a tracking benefit, right? Which is a lot of the times where companies will start their journey around automating the reconciliation process. So next opportunity is to now start taking advantage of more of the formats where can we auto reconcile on those accounts as well. The other thing is there's more bank balancing features that are coming into ARCs that will allow us, instead of just blindly loading bank files, we can make sure that they're balanced as well, and we're kind of staying in sync and keeping ourselves from trouble at the month-end cycle. On the EPM side, additionally, we've got enterprise journals that we'll continue to look at and say, can we start taking our manual journal entry process through enterprise journals? And then finally, you heard them say, so we're utilizing SEC to be able to start doing the task list, and they've already started that, managing the close process with that. But anybody that's done this, you've got to start refining. You've had some steps that you probably put in that maybe I don't need that. And there's big gaps sometimes in when you're looking at the process of the close that you didn't incorporate. So continue to refine the task lists that they're managing and potentially pulling others into the process as well. All right, so before we move into the Q&A part, thank you for staying with us. Thank you for not nodding, because I know lunch happened before this. We are going to do another, we're doing a raffle. Sorry, for swag, In-N-Out swag. Say it again? Oh. We'll do questions after the raffle. Thank you, guys.
You gonna do raffle first? Okay.
Well, thank you. All right. Did everybody get a ticket? Okay. All right.
If you're KPMG or In-N-Out, you cannot have a ticket.
Right.
Unless you're me. Oh, I get to.
You get to do it.
This is privilege.
Come on, Vanna.
Remember Publishers Clearinghouse when they would do this stuff? All right, I don't have my glasses on.
Okay, yeah. It is 298483.
298483.
Did they leave?
No? All right.
You're turning down swag?
Hey, next.
That's
News you lose.
All right. Oh, there we go.
Oh.
All right.
This is a beach towel.
Then,
Or do you want socks?
Oh, you get to pick.
Oh, you get to pick. Well,
Okay.
nice.
all right.
Or socks, or what's left?
Golf balls. Golf balls and socks.
All right.
Next ticket, 298452.
Oh.
Golf balls or socks?
Right, I will get the socks.
Okay.
All right. I'm going to get you. Don't worry.
Golf balls.
Last one, I hope you're a golfer. 298463. Okay?
All right.
All right.
Awesome.
Thank you.
Congratulations.
Yeah.
Okay, so we have like 12 minutes or so left to be able to answer questions that you guys have. So, whether it's for the In-N-Out team, for the KPMG team, whatever, questions that you may have. Oh, wait, sorry, if you're asking a question, just because this is being recorded, we need to do a mic, so I don't mind managing it.
Yeah, I think you touched upon it, but a quick question on the corporate bank account reconciliation versus you talked about settlement and depository bank accounts. So I understand that the corporate ones are still done in cash management.
Yep.
And the depository bank and the settlements are done in the ARCs.
Correct.
So can you touch upon a little bit more of why you had to send the sweep activity back to ARCs? Please.
So I'll start, and then if you want to add, so there was one kind of principle that the in-and-out team had, which was we didn't want to self-reconcile. We self-reconcile if there's adjustments to be processed because there's nothing in the ledger to represent that data from the other side. But we wanted to make sure that the primary goal was any data that was coming from the third-party side had a match instead. So that's kind of the underlying principle of that, but I don't know if you...
Yeah, and I think just for us, it was a completion check. It was really just making sure that the data was flowing the way we expected it to.
Yeah.
So it went back to reconciliation compliance module, not to the transaction matching module, right? The sweep activity.
The sweep activity came from cash management, so our main bank account sent